Good morning, everyone. This is Richard Calhoun, real estate broker in Silicon Valley for 40 years. We're here today to talk about statistics in the last week. This is week number 36, despite it saying week number 3 up here. So sorry about that typo. The handouts are not posted, but they will be posted when I post the video on my archive channel. This is looking at the supply and demand individually. The supply has two curves. The first one is blue, which is the total inventory. So you can see the total inventory dip down for the holiday like it always does, but we're still way down. We're at 80% of what we normally are. We'll get into a slide that will show where there's a real weakness. Last year, we were at 100%, and actually we got up to about 140% of the normal. We started this year with more inventory when people were complaining there was a shortage. Then we had a lot normal inventory, but now for the last 20 weeks, we've had about 80% of the inventory that we would expect. And that's the macro data. Santa Clara County, San Mateo County, condos and townhouses and single family homes all blended together. So you could have a shortage in one area and a surplus in another area, but overall you're at 80% of those what you'd expect it to be. The second line is the gray line is the number of new listings. The reason it shot way up is Labor Day was later than it had been during my base years, which were 2015 through 19. So we had more inventory come on the market because in a lot of those base years, this was the Labor Day weekend. And so the listings weren't coming on the marketplace. This year, it was September the 6th. And so that happened this last week. So now you can see there was the huge drop down, and now we're going to go back up to normal. I'm actually a little surprised we weren't above normal for this week, but we're not. The other half is the number of new offers. Number of new offers is the demand side. So you can see it basically is mirroring the supply side delayed by a week. And that's because the inventory comes on the market, the buyers come out, buy it all up, and sellers aren't willing to look at it right away. And that's why there's that week delay. So with a little bit of improvement this week, I'd expect a little improvement in the number of new offers, but we're getting to the point where I'm not so sure there's enough inventory for that to happen. This is looking at the DUI. DUI is the balance between the supply and demand, which dictates future prices. If we were having a normal year based on 15 through 19, we would be on this gold line. You can see we're down here, and on this particular graph, faster, lower number of DUI means the market's faster. So we had been down at 20 going right into the holiday when there's not any sales going. And now we're back up to about 29. I expect this to come back down a little bit, but anything under 40 is a red hot seller's marketplace. The white area is a balanced marketplace, which we spend very little time in. And the blue marketplace is a buyer's marketplace. This is overbidding. This gets delayed by about 5 weeks for the sale price to be reported, maybe even closer to 6 weeks. Plus we use 1 week's worth of data. So the data is 6-7 weeks old. So you have to keep that in mind. But last week we were talking about we were improving a little bit. But again, this week now the purple is the worst line on this graph. So it's the buyers are feeling less pressure now to overbid than they have had any time in the last 22 weeks. Now they're still overbidding. You come down here and it's only 15% of the sellers are getting below their asking price. About 10% of the sellers are getting their asking price, and somewhere around 75% of the sellers are getting above their asking price. So that's still a strong marketplace, but that just gives you an idea of how superheated the market was. This is pricing. The yellow lines are basically, the highlighted yellow is the high price for the year. So you can see we had a lot of high pricing right at the end of June, beginning of July. So those were 5-6 weeks earlier than that when the market was the hottest. You've had a few that have come back or were late in arriving at their peak. And then you had a couple that are coming up very recently. East San Jose, the real affordable areas, is at its record for the entire year now. So I almost need to come back and erase this one. Saratoga Los Gatos on the other extreme is also at its record for the year. So I need to come back and erase that one. Other than that, you can see that most of the record high pricing was earlier in the year. That's a quick recap. I'll pause quickly for any questions, and then we'll get into any details. Do I have any questions? Hearing none, we'll move on and look at a little bit of a breakdown. So here what we're doing is looking at the key indicators. On active listings, the inventory is what's important. So last week, we were at 52.4% of where we'd expect to be. This week, we're at 58.8%. So that's single family. So now keep in mind, I said we were at 80%, but that's everything blended together. So you can see there's a real shortage in single families in Santa Clara Clara County. They have less than 60% of the inventory they'd expect to have. Similarly, in Mateo County, they're at 75% roughly of the inventory you'd expect to have. Now you flip down to condos, and in Santa Clara County, you're 11% above where you'd expect to be. And the Bay cities, which are things like Burlingame, San Mateo, Redwood City, all the San Mateo County cities that are on the Bay side of the hill, they have almost 3 times the amount of inventory you'd expect it to have, which is just unbelievable when you think about it. So you go from 3 times the inventory to essentially close to half the inventory. That's why it's so important to look at what you're looking at, because there is an extreme shortage, I would call it, of single family homes in Santa Clara County. But if you look at DUI, it's not that outrageous. You know, for 3 times the inventory, your DUI is only at 27 days. So even though you have a huge surplus of inventory, you have obviously a huge surplus in demand. So we have this week and last week in all the columns. This to me is the single biggest indicator, because again, it's the supply demand ratio that dictates future pricing. And then you can look at the overbid frequency and the overbid magnitude. You can see single family homes is almost 83% in Santa Clara County, roughly 82%, call it, in San Mateo, and condos and townhouses are at 71%. So 71% of the sellers are getting more than their asking price in San Mateo County in a condo when they have 3 times the inventory you'd expect to have. That just shows you how much demand there is. People would be, I guess, going in and settling for a condo in the San Mateo area when they can't get a condo in Santa Clara County or a single family home. Flipping over to closings, or staying on closings, now flipping over to magnitude, you can see Santa Clara County is at 108.3%, which is respectable, but San Mateo County, that actually has not quite a hottest marketplace, not as a frequency of overbidding is a tad lower. Days unsold inventory is higher, so that's a slower marketplace. Inventory is more in line with normal compared to Santa Clara County, but yet they're overbidding more. Potential explanation is San Mateo County is slightly more expensive areas, and so maybe those people aren't so concerned about an extra 2 or 3% on their purchase price of the home. It's just an interesting observation, but what it also says is the difference between 110 and 108% may not be statistically significant. It looks significant when you look at the raw numbers, but it doesn't really impact what happens in the marketplace. And then you can see condos in both counties are somewhere around 103, 104%. So that just sort of gives you a breakdown of the large micro market areas within the macro area.
Richard?
Yes, ma'am.
Okay. I think I missed the active inventory. What is the 58.8% that stands for?
I'm comparing anytime I do a normal like that, I'm comparing it to the 5 years of normal. So that would be 2015 and to 2019.
Okay.
So I looked at those 5 years. I looked at what the available inventory was in week 36, and it was basically double the inventory we have now. And I used the median of those 5 years, not the average.
Okay, so the 58 is a low inventory?
58 is low. We only have 58% of the inventory we'd expect. Call it 60%. You have, 66.
Okay, I got it. 60% of that, the last 5 years median.
Not the last 5 years.
I mean, the highest.
What I'm using is the benchmark, which were 2015 through 2019. I picked those 5 years because they were the last 5 years that we had complete data for before COVID, because COVID hit in February of 2020. So 2019 was the last year. I didn't want to go back a whole long time, so I decided to go 5 years. Those happen to be 5 great years. So we're comparing low inventory to a great year, which really indicates the inventory is lower than even the 58 indicates.
Okay, now I got it. Okay, thanks.
You're welcome. Now what we're looking at is a breakdown of the actual raw count. So you can see the active inventory last week and this week. You've increased quite a bit, almost 200 homes, and that's between all the macro market. You can see where you picked up the most homes. You picked up almost 100 in Santa Clara County single family. You picked up 20 or 15 in condos and townhouses. You picked up 50 condos in Santa Clara County. And again, that's that's just because we came out of the holidays, sellers come back on the marketplace. Then you look at the number of offers in the past week, you can see the different breakdown. You can take the 196 and multiply it by 5, and you would expect to get to the 5-week normal or the 5-week data if there wasn't a huge shakeup in the marketplace. But if you take basically 200, multiply it by 5, you only get 1,000. So there's 10% more or 20% more on the 5-week number. And that's because this is low because we're impacted by Labor Day. Labor Day was just on Monday, so there wasn't much inventory the last week coming into the holiday, so there couldn't be many sales this past week because there just wasn't an inventory for people to purchase. And you can see the slowdown based on the 1 week at 27, but the 5-week, which is what I used to do, at least when I'm deciding whether the market's improving or degenerating, you look at the 22. So when you look across here, all these areas are pretty strong. The weakest is condos and townhouses in San Mateo County at almost 40 days. That's sort of the threshold of, super hot marketplace into a balanced marketplace, but it's not a line in the sand. It's a gradual thing across the whole way. So, people are still going to feel it's going to be a strong marketplace, especially when in Santa Clara County, you're down at 30, both combined is at 32. So the market is strong, no real issues yet. This is looking at the days of unsold inventory over time for the 3 major market areas, which are Santa Clara County single family homes in the red, and that is the fastest marketplace, followed by the condos and townhouses in Santa Clara County, the gold line, and then San Mateo County being the sort of the gray line. And you can see how much San Mateo County has dropped down at the same time Santa Clara County single families is increasing. So they're about ready to meet in the middle if the trend continues. Here's my heat map. Days of unsold inventory comes first because it's the single biggest, most significant indicator of what's happening in the marketplace, in my opinion. You can see the intensity of the red is the hotter marketplaces. So you can see the San Mateo County area right on the base cities is pretty hot. This is single family homes only. I don't include condos and townhouses in my heat maps. Now we're looking at each component. The blue line is the active data for this year. The gold line is where you'd expect the data to be. So you can see we're at 1,750. You expect to be at 2,250. So you're missing 500 homes, and that should be about 20% because this is blended data. So that's why there's only a 20% discrepancy. If we were looking at single family homes in Santa Clara County, there would be a 40% discrepancy. Looking at the new listings for the week, basically, I still say that the blue line is essentially mirroring the gold line. Yes, there's a disturbance here because the holiday came a little bit later, but if you just shift this peak back 1 week, you're basically right there. So really what you'd expect is the number of new listings to continue to go up because the market doesn't tend to change drastically overnight. It tends to follow normal patterns and shift gradually, if that makes any sense. This is the number of new offers. You can see the number of new offers is quite a bit above where you'd expect it to be, and it plummeted down. And again, this is because last week the sellers didn't put any homes on the marketplace because they were going into the holiday. So there was no homes for buyers to buy over the holiday week, which is ending today, and is what I'm reporting on, which is why this has come down. Now with the new inventory coming on the market, I'd expect this to come up again. Closings is really a non-issue. I probably should even delete it. It's basically the number of offers delayed, but again, you can see the pattern is pretty normal. It's got more spikes in it because doesn't have a 5-year averaging that the median down here does, and a lot of that has to do with the end of the year and holidays. Here's the frequency of overbidding. You can see that the macro data, it's basically coming down ever so slightly. And just for the record, this last data point is pretty close. I did the data, but then forgot to save the file. So I did it from memory. It might be 0.1% high or 0.1% low, but it's pretty accurate, but it's not the real data. I will get the real data in there. I clearly have a problem here. I suspect that there not any significant change. I know what this issue is, but I can't fix it live. This is the heat map for overbidding. The redder the color, the more frequent overbidding is. You can see see we're got Foster City, 100%. I've never seen that before. So every one of the sales that closed in the last week in Foster City sold for more than their asking price. I thought it was impressive when we were at 95 and 96%, but there we are on 100%. Can't beat that. It's impossible to have more houses selling overpriced than sell. So if you ever see 110%, call my attention to it because that's a data error. But the lowest number is 56% in the rich areas in San Mateo County. But after that, we jump up into the high, well, actually San Mateo Coast at 70%. But 70 to 100% of the sellers are getting over their asking price. That's pretty phenomenal. This is the magnitude of overbidding. Notice the downward trend here. It's not significant. They're still getting more, but buyers, for whatever reason, even though I'm sort of sensing the market really heating up again, 6-7 weeks ago, the buyers felt a pause in the marketplace, and we saw a pause. We were starting to heat up for the last 3 weeks, but this is the biggest pause now. So it's going to be interesting to see if the pause is longer term or whatever, but it's only a pause from a super heated marketplace to a super heated marketplace. So it's nothing to be alarmed about. This is the heat map of the magnitude of overbidding. The concept's the same. The redder the color, the more overbidding. Now, just because this isn't necessarily as red as it was before, it's because you have to get up to 117% to get to saturated red. But those areas up there, you're at 112%. So getting 12% over your asking price is a pretty hot marketplace. So you got to watch my scale to make sure you understand what it means. But the concept is the lighter the shade of pink, the less closer to asking price they're getting. The darker the red, the more overbidding they're getting. And that's magnitude. Here I added the micro market areas, and I think this is a nice chart that people might want to spend some time on. What it does is it allows you to compare the three major components: DUI, frequency, and magnitude of overbidding. So the top ones are single family homes. The bottom is condos and townhouses. I will make a disclaimer that the condos and townhouses, the color is not accurate. The numbers are accurate. So, because, 20 days of unsold inventory, that should be, a deeper red, I think. I think what I did here is this is data from last week. So the colors are going to be close, but not exact. And I don't know if we could tell if they were off or not, but I like to just make disclaimers when I know they're inaccurate. So the condo data is a week old, and that was just to give myself more time. What I'll probably do is do the condos a day ahead of time. Here's the graph we already saw earlier. This is showing the overbidding for each week, and you can see the purple line is at the bottom. So it's the worst week we've had out of the last 22. But again, the worst week is not bad when 75% or more of your sellers are getting more than their asking price, and somewhere around 7%, maybe 8% are getting 20% or more above their asking price. I mean, that's not something to cry about by any stretch of the imagination. Here you can see the last 12 weeks. So you can sort of see here's this week. The deep orange here is last week. Then the gray line, which is up here, is the second week back. And then the third week back is sort of the light yellow. But then after that, you came back this way, and it's hard for me to pick up the color code on the yellow lines, but we went back down. So we were up here basically 8 through 12 weeks ago. You can see all the dotted lines were at the top. Then we calmed down, then we heated back up, and now we're calming down again. So it's just interesting to see the ebbs and flows of the marketplace. This is sale price. The color code here is based on the median. The number to the left of the median is the lowest 10 percentile. The number to the right is the highest 10 percentile. Blue means that you're below the median for both counties. Red means you're above. Color code, again, is based on the median price. And I haven't updated this chart, which is why it's still dated the 4th up here, because I had some technical issues. And I think with that, I'm done. So I will pause and see if there are any questions and answer those, or see everybody next week. Any questions?
No, I don't have any.
Well, thanks for joining me.